Hey guys, it's Crossroads here. Today we're looking at to see if Hims and Hers, the stock ticker Hims, is a buy. It has plunged from above 30 to now trading at 19 over the past week on a bit of news. Of course, they had earnings, which were very, very good. Hims is one of my most recent holdings. I have three new holdings all of this year. I might add one more. We'll talk about that in the next day or two. But let's focus on Hims for now. So, what is the news? Why is this stock flying down? You can see that Amazon introduced basically a competitor product. Amazon has been in the telehealth space for a number of years, but unlike previous iterations where Amazon's products largely deal with other telehealth as far as providing physicians visits remotely and some other prescription products and some generics as well that weren't necessarily offered by HIMS. This is an apples to apples comparison. Now, there are some differences, and we'll look at it just a little bit, but you can see these are low cost and for men's hair loss, anti-aging skin cream, ED. There's many products that him has that is not offered by Amazon, but this is definitely more of a threat and more of an apt comparison. And so, of course, there's a news break as far as the article and everything that this is something that they will be pushing out. And this is a serious, credible threat. Now, the way that the market has reacted, you can look at it here. HIMS today is down 7.72%. You might think, oh, that's not too bad. Over the past week, though, it's down 19%. And from the peak, it was at $30 and some change. And so this absolutely has had a massive impact on the stock, although it's probably not the only piece of the news. Is this justified? Is HIMS in serious trouble here? Or are they actually going to be okay? Well, first, I want us to look at a corollary. So Walmart actually entered this space about 4 years ago. Walmart, of course, knew that they had very good distribution. They actually ended up partnering with a data analytics firm, and they extended that contract back in 2022 for 10 years. They had massive amounts of data, just like AWS or Amazon has in this space, and they thought that they could use that to give better outcomes for their customers. They thought, we have a clinic right here in store. They can have several other clinics as well. Of course, they have pricing power. And so Walmart said, we can get in this space. We can make now. Walmart, of course, announced earlier this year, April 30th, that they were getting out of this business. Now, part of the issue that they ran into was they went hard after prescription fulfillment, which is not a business that has high margins at all. And there's a lot of issues as far as regulation, as far as insurance providers just not wanting to reimburse. And so they ultimately said that we determined there's not a sustainable business model for us to continue. They exited the space. Is Amazon a more credible threat to HIMS in this industry? I would say so. I say they have a slight edge, although it's not by as much as people think. Walmart has actually been very savvy in this business and in this space. Now, the question is, with Amazon entering this space, does it basically mean that they're going to dominate and every other player is going to really suffer and struggle, including HIMS? Well, I would say no. Here is a news article from 1 year ago. Amazon to launch online vehicle sales and stocks of CarMax and Carvana fell. And so when this was announced, and it was basically, if you look at it, November 16th, 2023, almost a year ago, the reaction initially was that Carvana fell by about 8%. CarMax fell by about the same. And many of these others that offer similar services said, you know what, Amazon is getting the same place. And so people started selling off their stock. Carvana, of course, was struggling as a business and as a business model. And so surely this means, since Amazon entered this space, that Carvana is nearly bankrupt. Let's pull up the chart and take a look. Now, of course, the chart is not everything, but let's look at the 1 year because it's been about a year. And surely they must be down a lot. And as you can see, sure enough, they're only up 615.42%, rising from what is it, $32 all the way up to $240 today. Now, I don't think that there's, of course, a number of problems with this illustration. It's a different model. Direct to consumer, though, it's very similar in that way. And I think Carvana, I was sleeping on it at the time, just to be honest. It was probably underpriced. But the initial reaction whenever a mega company that has been wildly successful in the past, like Amazon, enters a space is it's right to be a little bit cautious. It's right for the stock to sell off somewhat. Now, Hims absolutely dumped. And yesterday it was down, I think, 25, 26%. Of course, it's down even more today. Is that justified? I would say absolutely not. When we look at this business, there are a number of differences with it and Amazon. First, other companies like Amazon, we just looked at Walmart, have struggled entering this space and just adding it onto their initial ecosystem and scaling that to their consumers. Many consumers want a separate health company that is very focused on their needs and is able to personalize and give that quality of care. Amazon has not proven themselves in this. I don't think they'll be a failure, but I don't think they're going to be quite the success, and especially initially, as some people are thinking. Now, another factor as far as Amazon is concerned, this is not their primary focus. If this business doesn't make it for Amazon, that's okay. They can burn cash as long as they want, as long as they want to be in this business. That is a strength for them because they can take a while to get it right, and they can get it right. But Hims has to make this succeed. They are one of the leaders in the telehealth industry. They are growing at a very rapid rate as well. And they offer very personalized care. Now, what do I mean by personalized care? Well, first, let's look at just a little bit from the Hims shareholder letter this quarter. This is very recent. And so the main thing that sets Hims apart is they don't just focus on selling generic drugs like Amazon does. They have some of their own solutions, such as their oral weight loss solution, which is having phenomenal results and is at a $100 million run rate over the next year. And you can see here really what separates them as well is this right here, subscribers. You can see how much it has grown 44% year over year. Revenue is up 77% year over year. However, note with revenue and also with EPS this quarter, it looks better than it really is. Part of this is due to the ability to offer a GLP-1 compound as long as these drugs are on the FDA shortlist. And that will probably end at some point this next year, if not a little bit earlier. But it is meaningful revenue for them. But the subscription and growth is phenomenal. And it's a 40% revenue growth if you take away GLP 1s entirely. Absolutely fantastic. Now, if you scroll down, you can see margin profile is also fantastic. Those gross margins are right about 80%, a slight decline, partly because they are scaling some new products that are personalized specifically to Hims that other companies don't have, and also because of GLP-1. There's just lower margin there when you're compounding those products. As far as subscriptions, we can see that this has been a massive, massive boost for Hims. Now, they divide this into two different sources of revenue. So one is non-personalized care. These are items that mostly are drugs that Amazon can offer and other providers like Ro can offer. Many other competitors in this space. Personalized is a little bit different. What is personalization? Personalization takes a few different factors. One of it is they have, of course, an AI, MedMatch, that helps physicians be able to best determine the best match for this person's profile based on the wealth of data that they have. Can Amazon have similar access to similar data? Sure, they absolutely can. But it will take time to prove whether that is successful and trusted, although I expect that it probably could be. Another aspect of personalization is Hims actually owns their own pharmacy compounding facilities. Amazon is partnering with some, but they do not own their own. They do not have the expertise like Him does in running these. In fact, the guy that is in charge of their own compounding facilities, which they bought, which helps them massively with margins, has been in the business for over 3 decades. That is not an easy business to get in at all by any means. And so, what they're able to do with that is they're able to offer a compounded product that has multiple different medicines in one form factor. For instance, they give an illustration that oftentimes with men, erectile dysfunction is oftentimes suffered by somebody that may also be overweight or may also be somebody that has heart issues. And so they might combine, instead of taking multiple separate medication, have one that is personalized for a person that is their daily dose of what they need for their heart medication and also their ED needs as well. Now, not everybody wants that, but you can see that their subscribers that are personalized are now over half of what they actually have as a business. If Hims was only selling generic drugs that everybody else had, they would still be okay. But Amazon would really eat into that versus this personalized number, which has a lot of retention and is very sticky. That's not likely to happen. Now, the other way that they personalize their product, and they're able to do this a lot better than others because of their compounding facilities and the expertise that they've hired, are different form factors. Some people prefer to have gummies or mints or chews or oral solution rather than shots or mega huge pills or whatever variety. And the nice thing is when you are selecting your medication, the Hims continues to expand this. But you can select whichever form factor that you prefer as well. And of course, not every form factor is available for every product because they run rigorous tests to make sure that they are going to still have the same efficacy. And some just don't if you take it orally versus intravenously. So, Hims is a little bit differentiated there. And this personalization, I think, really helps them. Now, I recognize them, and this is why I entered Hims as one of the leaders in this space. They're growing, they have fantastic leadership. They seem to really have great cost control, great brand recognition. They're, of course, in stores as well as have subscription revenue monthly. And so they're growing fantastically. When Amazon enters a space, what tends to happen is not that them taking down the leader. There may be some headwinds, and I think that there will be for Hims here. But instead, what happens when Amazon enters a space is they're kind of like wolves being introduced in an ecosystem. If you know anything about wolves, basically they enter and they go and hunt prey that is older or that is weaker, that is sicker, or very, very young and immature. Those that are strong tend to survive. Those that are weaker are prey for the wolves. And that's what happens time and time again when Amazon enters a space, whether that's a car service, whether that's streaming video, whether that's with grocery stores, or here, whether that's telehealth. So I think what's going to happen is a bit of a headwinds for Hims. They're still going to grow at a fantastic run rate. And the TAM of this industry is absolutely fantastic, even here in the United States alone. Of course, they are an international company that's slowly expanding as well. But I would watch and just see if margins continue to be up there around this 80% mark. If those start coming under pressure and they're falling, below 70%, I would have some concerns as an investor, although I don't think that's going to be the case. I would also have concerns if their growth rate dips below 30% on a 2-quarter basis. One time it can certainly happen, especially if something strange happens in a quarter. Although with January 1st coming up and many of those New Year's goals coming up for people, especially the rate that their oral solution, which is unique to Hims, is going to be adopted, I expect that they're going to see some fantastic tailwinds in the near term. Now, the bigger issue for Hims, and one of the reasons why I think the stock is also falling even more today, is RFK has been appointed as the head of HHS. And of course, the FDA is under his purview. RFK Jr. has said some things about GLP-1s, which Hims does not own the rights to, but they are compounding because it's on the FDA shortage list. That may all change a little bit earlier than expected. There may be additional scrutiny towards pharma, and Hims is certainly part of that industry. And so I actually think that that's more of a credible threat than Amazon entering this space. It's something to watch out for, something to be aware of. Am I a buyer at Hims? Right now, I have Hims where I'd like to have it in my portfolio. Although if it continues to fall below 17, that's a very attractive price to me. And so I will certainly look at buying more. And by 15, I will have added a good bit more of Hims just because I see this as a fantastic company in a fantastic space with a bit of headwinds, which should not be overlooked. But I do think that they're going to be totally fine here. What do you think? Let me know in the comments. And for now, happy, successful investing.